Well, South Africa's Industrial Development Corporation will invest $420 million in a new platinum venture in partnership with Pallinghurst. The state investment agency said that the venture would create around 9,000 jobs. And joining me in studio is Pallinghurst CEO Arne Frandsen and Abel Malinga, who's Divisional Executive at the IDC as well. Welcome to you both, and thanks so much, gentlemen, for joining us at the desk this afternoon. Abel, perhaps let's start off with you because, as I've said, the IDC investing this $420 million in a platinum venture. What's the rationale for going down this route right now? Because we do know that the IDC's total exposure to the mining industry currently stands at 45 billion rand.
It's quite a number of factors that has attracted us to this investment. Mainly, it's in line with our mandate to create jobs. As we know that in South Africa we have a problem of unemployment, but also it talks to some of our long-term vision, which is adding more value to our locally produced minerals. We are looking at putting up a smelter together with our partner in future to beneficiate the concentrate that they're currently producing, but also to give opportunities to junior mining companies that may want to treat their concentrate through this new venture.
So there's a host of factors that's simultaneously at play and influencing, the IDC's investment decision right now. What exactly are we looking at from an exploratory perspective here, Arne? You talk about creating a major new PGM producer. What in your books constitutes a major PGM producer?
It is something that has a major impact on the market and can play an important role as the market develops. We currently are producing on an annualized basis 100 to 150,000 ounces. We have a clearly articulated growth plan. In the next 5 years we will get to 1.1 million ounces, and we will take a bigger share of the entire value chain, meaning that we will, as Abel mentioned before, in partnership develop our beneficiation part. And historically that has been a problem. There hasn't been enough external access to beneficiation. The mining industry has faced, especially PGM, the issue of deep mining. If you mine in 2 kilometers depth, safety is a major issue, and you have seen in many of the Section 54s that have hit the industry is because they're mining at that depth. We will mine for the next decades either as sky miners, being open pit, or very shallow, where you don't need refrigeration.
Obviously, that's some of the advantage. In terms of disadvantage, I was speaking to a trader at the desk, and he was saying that their research analysts are highlighting the potential geological challenges that this project faces. What are some of those challenges that sit on the horizon?
I think when we started off, we had some problems with what's called oxidized ore, where it's more difficult to extract the ore. But they are really teething projects that problems that any project will have. Our mine is located in arguably the most well understood area, which is the northern part of the western limb of the Bushveld. Just south to the Union mine of Anglo, and I think that it is an area with a lot of prospect, and in some way we are where those mining companies were 30 years ago.
What this investment does do is tell to an extent of your outlook for the economic picture right now. We know that platinum is used as an industrial metal more so than anything else, and where we've had supply side constraints come to bear on the platinum industry, certainly here in South Africa, the demand side has been constrained as well. Now with demand picking up, what's your outlook for that economic picture and demand moving forward?
If you look at the fact that 80% of the PGM resources in South Africa, what we are looking at, but also if you look at the supply side, it's under pressure, which will then augur well for improved prices going forward. But what will be of interest to us is to make sure that we develop the downstream beneficiators, so that you drive demand as well. There's new what called uses for platinum, like your new energy cells, that one can further develop and manufacture in South Africa, which can also further drive demand. But also we know that with our motor industry, the auto catalyst converters, they use a lot of that. We want to use as much as possible of that here in South Africa before it gets exported.
We highlighted a potential challenge on the mining and exploratory side of things in terms of geological challenges. On the beneficiation side of things, do we face a potential challenge in skills to actually take this project to flight?
I think skills can always be developed. We don't have it in abundance, but I think we have the skills here in South Africa. I think the major challenge, especially with your conventional technology that is currently being used, is your electricity. But this new technology that we are exploring uses a very low energy, it's a low energy intensive operation. But it also, it's versatile in terms of being able to process the Merensky reef as well as the UG2, which has chrome content in it. So with that advantage in the new technology, the future can always be bright.
Of course, those factors to bear in mind are where we've got difficult times for miners generally being felt right now, rising costs, taxes coming to bear on miners operating not just here in South Africa, but locally. Looking at the balance sheet though, I mean, you're looking at an unhedged and debt-free producer here with a pretty healthy balance sheet, cash of $500 million, sitting on that sheet. What kind of future developments are we looking at and investments are we potentially looking at in terms of enhancing this group or this new entity's growth profile moving forward?
I think it's very important that we took a conservative approach to balance sheet management. There is no debt, and I would challenge you to find a stronger balance sheet anywhere in the platinum industry. So uniquely, we do not have debt. We don't have any forward sales. We got money in the kitty. We got $500 million that will be used specifically on developing our mines, and it will it will enable us over the next 5 years to get to the 1.1 million ounces produced, and it will do so by investing equity.
So it's more so a strategic position that you've taken and adopted, as opposed to there not being any other opportunities out there and nowhere to plow money into.
The IDC is the third sovereign wealth fund that is investing in our project. The Dutch APG and the Singaporean Temasek have also invested a number of $100 million in this business. In total, Pallinghurst has brought more than $1 billion into the platinum business in South Africa. And we wouldn't do so if we wouldn't believe that we are private equity players, that we will create a good return for our investors, including the IDC.
Let's leave it there, gentlemen. Thanks so much for your insights this afternoon.